It's time for another Ticks and Trades daily recap for Tuesday, January 28, 2025. I'm Sam Morton. You're looking at a daily chart of the SPY. After a little pullback in the morning, maybe a kind of a fake out by the bulls, they got priced to climb most of the day. And interestingly enough, they got the close to be pretty close to the high of this breakdown candle back on December 18. So where will price be at 2 p.m. tomorrow in time for the FOMC announcement? That's a question I have. We'll come back to this daily chart later and talk about that. First, here are the levels and the game plan as laid out before the opening bell this morning. A pair of levels at the top here that are highlighted comprise the top and bottom of a zone that I felt good about this morning. After I sent out this email, I made the decision to not get involved in the market today. That will be the case tomorrow too, since interesting things could happen leading up to the FOMC announcement and that press conference, and I have some other things I'm working on anyway. I expected increased volatility today, and I know my levels tend to work better when the market is acting more or less normal, so I stepped away. But in doing that, I missed some opportunities today. As it turned out, there were some good trades available. We'll look at those possible trades now. So this is what the SPY looks like after the fact. So if you count the zone up here, a pair of dashed lines, as two distinct levels, 4 of our levels were hit during the open session. Zones are treated a little differently. I'll get into that shortly. So where were the trades if you were treating this thing as a process? First, the trades I'm talking about are intraday scalp trades in the E-mini futures that correlate with the SPY. It's the symbol ES. We're currently trading the March contract. So the SPY opened right below. Let me remove this line, delineating line that shows the close of yesterday. So they opened right below this level at 667. They spiked it and then fell quite a lot for the first 20 minutes or so. You're welcome to get involved in the futures market as soon as the equities market opens at 9:30 a.m. Eastern. So going short at this level, seconds after the opening bell, would have worked out quite well for you, but I just prefer to give the market 15 minutes to settle in. So the first trade, according to my rules, would have been a short trade when they came back up into this level at around 10:08 a.m. They hit the level to the penny, by the way, before pulling back, but I recommend adjusting each level toward price 5 cents, so the operating level would have been 662, and this is just a way to pull in more trades and still let you get the 4 points most of the time. The operating level, 662, 5 cents below the original level. Grabbing 4 points was the plan, and that's what they gave you within a couple minutes. So now this 662 is off the table for any more short trades of the day. That never came into play because they were above it the rest of the day. The next trade would have been triggered at 602.85. We'll pull this down 5 cents. But that 5 cent adjustment wasn't enough to pull in this trade. They came up close, but they did not hit the level, just pennies away. So this is a near miss. So they came up close within 10 cents. In this case, it was just a few pennies. Pulled away enough for a base hit had that been triggered. And to me, that's the trade. I don't want to trust that level again, at least on the short side, because there's no guarantees that it will work. The second time price did hit this level, ended up resulting in a reaction that would have given a base hit or more, but we're not going to count this as a process. So this level was done. No trade there on the short side. So the zone starting at 604.18 produced a good trade. So by selling E-mini contracts at 604.18, you would have needed to be willing to sell again if price continued higher to the top of the zone. And they did that, as you can see. So your combined position right in the middle across these two levels handed over a base hit after a few minutes. When I identify levels that are in close proximity to one another, I found that it's better to look at the whole area as one big fat level. So it kind of changes my approach to trading an area like that compared to a distinct level, which tend to be more precise. Also, I don't feel the need to adjust levels of a zone with that 5 cent buffer we talked about. The whole area is valid for reaction for a trade anywhere in the middle if price approaches it the right way. So 3 official base hits if you were playing by the rules. 1 down here at this level and 2 base hits here across those 2 levels of that zone. If you were more adventurous, you could have had a 4th base hit if you did end up going short over at the 602.85 level and just waited it out. And by the way, once this short trade up at the zone paid off, it's off the table for more short trades. So when they came back and hit it again, once here at the bottom, they went through it here, you're not going to trade it. And this is why. They just went through it the second time or third time, whatever this is, like it wasn't even there. And price did come back down to the top of this zone. Price did not hit the top of the zone here, but they did toward the end of the trading day. It wasn't until 10 minutes or so before the closing bell, 3:50 p.m., and that is too late in the day for me to be interested in getting into a futures trade. Under other conditions, this zone would be good for a bounce on the other side, a long trade in this case. It's what I call a recycled trade. You can see they bounced a little bit here, Might have worked out if you chose to go long for a quick bounce when you only have 10 minutes left on the clock, but that's just too risky for me. So back on the daily chart, the two main things I want to point out is where the SPY closed today in relation to the top of this breakdown candle from December 18, and a trend line that can be drawn from these lower highs that started back on December 6. I believe these two levels are important, and where price is along those levels, at least currently important. After today's close, price is right between those two areas. So if the SPY did not break above this trend line today, and they stayed below it, then it would be easier to say that the bears may still have the ball tomorrow in the near term, but the bulls were able to fight above that and get through some important areas to get where they're at now. So I just find it interesting that this is where price is, at least now, the day before the FOMC announcement. Anything can happen in the overnight session, but let's just say price is still within this range, this area, between these levels by 2 p.m. Eastern on Wednesday. Well, I'd wonder if the decision would need to be made then for price to break above, and there's some resistance above here as well, by the way, right above this level, for them to break through to test the all-time highs again, or would the bears get below this trend line and give them a chance to go lower, and price could get forced down if they got below that trend line. We'll see how things look by the morning, but for right now, these are the two areas that I think the SPY needs to start closing hourly and daily candles on the other side before we can say who is in charge, either the bulls or the bears. I'm sure there will be some interim levels that I can identify for small trades in the E-minis tomorrow, wherever they're at, but in the big picture, this is what I see. Over on the tracking logs, the first one is the PBR, the Playing by the Rules log, and we just talked through this, and you can read the notes and see the three levels for 12 ES points. And then on the Sam's Trades log, no trades taken. And for yesterday, you might remember I had that trade open. I was out of the money. I saw them bouncing off an area after I finished the video up last night. It looked like it was going to be pretty good support. Wasn't going to take a chance for them to go higher. So I was able to close that trade out, 2-contract position at 16 points out of the money. So that was yesterday. Today, nothing. And tomorrow, I don't plan to trade. I'm going to finish a project I'm working on. So I'll be busy all day. But still, there will be levels sent out tomorrow morning, like usual. So that's what I have for today. Thanks for watching. I hope you found some value in it. And again, look for the email with the daily levels and the game plan tomorrow morning. If you're interested in getting these, then just head over to ticksandtrades.com. Go over to learn, and you see the form right here. Give me your name and email, and I'll add you to the list. I'll talk to you in the next recap video. Have a great rest of your day.